Welcome to the Business Advisory Services podcast. Today's subject, office services over 52 weeks. And accountants, bookkeepers, business advisors. I think this is a very important part of the transition of services to include more than taxation items. Thomson Reuters issued a very interesting white paper this week, and the title could well have been "The Past Has No Future," because that was the main thrust of their opening comments. I think this should be the new mantra for SMEs in 2023 and beyond, turning the focus to strategies that can bring growth to revenue and profit is key for SMEs, Thomson Reuters indicated. The challenge for accountants is to understand the challenges confronting your SME clients and prospects, which include the following. Cash is tight. We all know that, but it is very tight in a lot of SME businesses. Costs are increasing in many activities beyond inflation. But there is an appreciation that to survive, businesses must grow. It's very difficult to mark time in businesses. If they try to do that, they probably won't be in business to see 2024. So in summary, all businesses, no matter what sector, need to keep on moving to adjust and adapt to changing market conditions. So that then brings me to exploring this whole concept of the 52-week service. Where do you start? If you've traditionally been an advisor to clients, preparing an annual set of accounts and a tax return, perhaps occasionally preparing some interim accounts because the bank managers asked for an update, you probably don't know too much about the business. I think you need to review your client's business so that you have a knowledge that is 1 inch wide but a mile deep. And this was a comment that I'm using from Adam Hale, an American accountant who has pioneered the concept that American accounting firms should be supplying virtual chief financial officer services to their SME clients. And at EOS as BIZTOOLS, we endorse that approach, and we are trying to help accountants to be able to deliver that type of service, a virtual CFO service. The requirement to offer that type of service, though, is you need to know a lot more about your clients than what you probably know from the preparation of annual accounts and tax returns. So where do you start on this? I think in the first instance, you meet with the leadership team and trace the business journey from the first activity to the conclusion. Now, the first activity might be an order being placed with a supplier, either in Australia or overseas. Or it could be an order to receive raw materials from somewhere, again, in Australia or overseas. But what then happens? What's the payment arrangements? What's the quality control? What's the checking to see that the goods that arrive are what was ordered? Where does that raw material or that completed stock item go to? Is there proper inventory control so that all goods and purchases are being accounted for? So the start, I think, is a quality control and an internal control review. Is there any deficiencies? You are now performing a virtual CFO role. You need to understand the business. Who are the team members? What qualifications do they have? Do they participate in staff training? What are the energy requirements in this business? Where's the energy sourced? Is there likely to be problems in supply? Is this periodic, or is it because of the war in Ukraine, or what other situations causing it? Where are completed stock items stored once they've gone through the production process? What's the stock turn? What's the stock recording system? Is it satisfactory, or do you have concerns about it? Who does the marketing in this business? 30 years ago, marketing was not a very widely discussed subject in Australian business, but now it's crucial. Every business needs a marketing strategy, a social media strategy, a website, communications, newsletters. It happens all the time. So what's your client doing about it? Who's responsible for sales? Does this person set the selling price? Or is there a minimum that they're not to go below in selling products without referring back to the CEO or to the leadership team? What's the controls to make sure that the company's receiving all the money from a sales transaction? Is there intellectual property development occurring? Is it documented? Is it recorded so a decision can be made at the leadership team whether there needs to be appropriate protection given to that intellectual property? And could the company claim the research and development tax offset? If so, there needs to be systems implemented. What are the risks within this business? Now, most businesses have probably got at least 30 risk categories that you should work through and make sure that there's an understanding and that there are strategies in place. What about the personal property securities register? That can be dynamite for some businesses that don't know about it or ignore it and haven't registered a particular client or a business that they have stored assets with on the personal property securities register. A lot of money is being lost. On my reckoning, at least $4.5 million through people not understanding this legislation. It's not just there for when you want to sell a motor car. It's there to cover a whole range of other things. Debtors. Who's responsible for debtors? My observation is in most firms, no one wants to claim ownership of debtors, but they're very important. They represent cash. But until they're converted into cash, they are not cash, of course. So who follows up debtors who are outside the firm's trading terms? What engagement letter actually went to a new customer? Do they send one? Is there this communication? You're undertaking this review so you have a feel for how this business, that you now have a fair amount of responsibility. You're the virtual CFO, or your firm is. Debtors days outstanding, calculated promptly at the end of a month. Is there follow-up action? So out of this overall review, I think you should be then able to develop some flowcharts. This is how this system operates, so that can be made available to your entire team that's going to work on this client's affairs, so they understand about the internal control and the quality control system that's been built in. I think it's then necessary to look at the preparation of a business plan. A business plan is a very important document. In fact, Thomson Reuters in their white paper said business plans, because SMEs can benefit from regularly reviewing and updating their business plan and strategies in order to identify new opportunities for growth and set clear goals. Are you undertaking that sort of work for your clients? If not, I'd suggest that you have a good look at it. Within ESS BIZTOOLS, we've got a complete product package on business plans which will help you to offer this service to your clients. But the preparation of a business plan shouldn't be something you go off to a back room in your office and sit there for a day or two and write it up and go back to the client and say, here's your business plan. Now, I've seen that done by some consultants, and I think it's a disastrous way to go about business planning. You need to sit down with the leadership team. And I also like getting the entire team together at some stage, like for half an hour. Gives them the chance to get something off their chest and say what they think about the organisation. Sometimes they come up with some very good ideas, and they can give you some very good feedback from what the customers are saying. So unfortunately, in a lot of business, the top group of leaders don't really get that contact. They're not at the coalface. They're not hearing the customers' complaints, whatever they are. They should be being communicated to the leadership team. And when you've completed the draft of the business plan, I think you should submit it back to the leadership team and sit down with them for an hour or two, go through it, make sure they understand it, because they are the key group to implement. Now, if you're the virtual CFO, you're part of it, but you're not the whole show when it comes to implementing a business plan. It's going to cover production, marketing, sales, engineering, storage, distribution, a whole range of activities within a business. The next thing I think you should look at is the chart of accounts. Now that's a fairly simple item when you consider it from the preparation of an annual set of accounts and a tax return, but in a commercial business, I think it's very important to make sure that the proper chart of accounts has been established. There's enough dissection about to record sales. So it's just not all called one sales figure. If there's separate departments or types of products that are being sold, it's a good idea to dissect it so that the figures are readily available. You haven't got to go searching to find out how much of product A got sold last week. And then what can happen as part of the predictive accounting reports is to prepare a budget. Now the budgets, I think, should be prepared for each individual business unit so that you can have some accountability. Don't put them all together into one profit and loss account. We then need key drivers because there's all sorts of other things happening in the budget process, isn't there? There's raw materials inventory being built up. There's production reports being produced. Energy's being used. We're going to have final stock and it's going into the stock accounts. Debtors. And obviously we need to know the debtors' days outstanding. Creditors. Creditors' days outstanding can also be very crucial if the business has made agreements with key creditors as to when payments are going to be made. Part of your role then is to monitor that. If the agreement is that the key creditor is to be paid strictly on a 30-day basis, and you find that creditors being paid on a 45-day basis, that is something that should be clearly identified to the leadership team because they could find that that supply is cut off. That could be disastrous. Obviously, payroll is also very important. And then what flows from that predictive accounting process for budgets and for the key drivers is that we now move into the cash flow forecast. And what this is going to show is the business is going to run short of money. And then consideration can be given as to whether there's a need to raise additional funding. And the Thomson Reuters white paper referred to this and said business funding review. For accountants, you could include an analysis of the potential to borrow money. The business will also need security if you're going to borrow, so make sure they will have enough security. Or you could look at capital raising to assist growth and expansion. And that might be Section 708 of the Corporations Act, capital raising, or it could be early stage innovation company if the business is young, under 3 years of age. Or it could be crowdsourced funding equity raising if the turnover is under $25 million, can raise up to $5 million in a 12-month period. And then we would have the projected balance sheets because this gives you an overview of how this business is going to perform in the future and what it will look like in 3-5 years' time so that the leadership team can analyse the position. We then can move into what happens daily because we started this by saying we're going to look at how do you offer a 52-week of the year service to your clients. Well, you should examine what happens daily. In many retail businesses, they now use the cash register system to record sales by the hour. Number of customers, average sale, can give them information that they need, might affect their staff rosters. We need weekly reports if you're going to put in an effective system. A weekly performance report, which would include a profitability analysis for that week's performance, comparison to budget, and key performance indicators for every business unit for that week, which is then all submitted to the person responsible for that business unit, but also to the supervising leadership team person who's in charge of that business unit. So each week they know how they're going. This is what big companies do. I was the CFO in a listed public company, and I know what happens. They record this information all the time. And there is senior management input if things aren't in accordance with the budget. And at the end of the month, you should then be able to prepare trading and profit and loss accounts for each of these business units, a comparison to budget, and then a variation report between actual and the budget and key performance indicators. Isn't this far better than just sitting down and talking to the client once a year for the annual accounts? Obviously, we'd also get balance sheet analysis, supporting schedules for each balance sheet item, and supplementary information on a range of things, including debtors, creditors, work in progress, Research and development if the company is involved in R&D activities, capital expenditure. And my suggestion is that you, as the virtual CFO, would then prepare a monthly report, which would also include other things like feasibility studies on any proposed capital expenditure, updates on the capital expenditure projects, research and development progress reports, benchmarking comparisons, I think are very important. FMRC benchmarks, now called benchmarking.com, can supply information for about 280 different types of businesses in Australia, which you can compare your kind to. And also a very important item is, what's the finance team going to achieve in the next 3 months? What are the big projects that are going to be finished? And your report could then be submitted to the monthly business review meeting. That would be the leadership team that are sitting down analysing the performance for that month. They'd be looking at the weekly results, the monthly results, and analysing where the business is going. I think it'd be sound planning by the business if you chaired that meeting as the virtual chief financial officer or the partner in the firm who's responsible for it. There's some follow-up action like minutes and an action plan out of the leadership team meeting, and then an overall report would be prepared for submission to the board of directors. That's an overview of what I think you can offer to your clients as part of this offering services over 52 weeks of the year. It's an ongoing involvement to ensure that the systems are working within the business. If you have any other views or would like to discuss this any further, please contact me. You can send me an email, peter@essbiztools.com.au, or you could ring me on 1-800-232-088. There are some other important activities that you can attend to, which include research and development, grants, reviews and updates to inform your client of what's involved, export market development grants if the client is a business with a turnover under $20 million and participating in exporting, risk analysis, such things as personal property securities register. This will all help you in your talent attraction and retention, because this work is interesting and I'm sure your team are going to be quite happy with it. Your clients will be happy because they'll be receiving great reports. Your team are happy because they're undertaking interesting work, and you should be happy because your firm has got a diversification of your income sources. Have a great day, and I'll talk to you again in a couple of weeks' time.